Welcome back, everyone. This is the gold market review for the 12th of October. The gold market shied away from significant price action in the past days, possibly hinting that traders are waiting on very important events or outcomes to engage the market. The following days certainly keep important economic events in store for traders, thus we expect liquidity to increase. This report aims at providing gold traders with the most valuable information on how to trade and stay protected in the gold market. Our closing will include gold's charting insights with important technical levels identified. With the US dollar keeping an adverse relationship with gold's price, traders tend to focus more on how the US economy is performing currently and what conclusions they can derive from the data released so far. In the past days, gold's most exciting day unfolded during the US employment report that was released during the previous Friday. The unemployment rate dropped very notably from 5.2% to 4.8%, indicating some positivity, landing the lowest unemployment rate since the pandemic started. On the other hand, the non-farm payrolls figure came in just at 194K, pointing out the US jobs growth stalled for a second straight month. Moreover, the average earnings growth figures showed an increase in both the yearly and monthly metrics. Even though most emphasis was placed on the NFP figure, that mostly disappointed traders, going much lower than forecasted, we could say that the report displayed a rather positive picture for the US economy. Gold jumped higher by approximately $20 upon release of the figures, yet a few hours later corrected to levels previously seen. In our view, the event failed to meet expectations, yet the figures may have not allowed for anything more. Traders will be keeping their eyes firmly on the US inflation data to be released in the US session on the 13th of October. Gold is one of the most favorable instruments to use when inflation data is about to hit, as the yellow metal can be used as a form of hedge for rising prices. Gold traders are expected to react to the release, and opportunities may present themselves unexpectedly, thus traders are advised to be prepared. On the same day and later in the US session, we get the FOMC meeting minutes, which will be a review of the Fed meeting that took place in September. With this event, traders will also be on the lookout for any update on the views of the Fed on inflation, tapering its QE program, or even future forecasts. With the combination of the two events highlighting Wednesday's US session, the gold market could be in for a treat, yet caution is advised. In the days ahead, a number of US economic data can be used as possible gold market volatility. On the 14th of October, we get the weekly initial jobless claims figure, while on the 15th, we get the retail sales figure for September, along with the preliminary University of Michigan economic sentiment figure for October. On the 18th, we get the industrial production rates, and on the 19th, we get the housing starts number, both readings for September. On a separate note, gold traders will have to keep their eyes on the bond market, as yield volatility can signal gold price movement. As a closure, we would like to raise attention to the energy market that is currently seeing prices rise substantially with demand far exceeding supply. Energy costs have the effect of dragging consumer prices higher, thus economic risk could remain elevated in these circumstances, and gold prices can react to such a scenario. Moving now to our gold technical analysis, please note this is gold's 4-hour chart. At the moment, we are seeing a prolonged sideways motion between the R1 1770 resistance and the S1 1750 support that has formed since the start of October. The only breach above the R1 was seen during the previous Friday when the NFP figure was released, forcing a buying momentum to unleash. The movement made way for the R2 1785 level to become a target, but the level was not tested in the end. The R3 1805 stands above all our resistances and can be a good mark for an extended bullish strategy. In the scenario of a downward movement, the S1 1750 will be tested first, a level that has not been clearly broken so far in October. Lower than that, the S2 1737 level is also imminent, while our lowest support is currently S3 1720, which is the bottom formed previously in September. The RSI indicator follows the sideways motion moving nearby the 50 level, yet as the indicator remains above 50, it could be a sign that some limited bullish interest may be present. Yet we could say that the recent sideways motion in October has put a halt to the downward trend gold's price was in for the past months. Thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. Please note, as an effort to support traders on as many fronts as possible, we are now presenting live weekly webinars on trending subjects, and all our subscribers are welcome to participate. From everyone here at IronFX, best wishes for solid trading.